If you've spent any time looking for help with your taxes, you've run into a thick alphabet soup of titles: CPA, CTEC, PTIN, EA, attorney. Most people just shrug and say, I just need a tax person. But here's the thing: not all tax people are created equal in the eyes of the federal government. Enrolled agents are the only tax professionals whose credential is granted directly by the U.S. Treasury specifically for federal tax practice. Not the state, not a board of accountancy, the Treasury itself. Welcome back to the Zero Fluff Books podcast. I'm Lauren Twitchell. I am an enrolled agent, an EA, as of January 13th, 2026. Today we're going behind the curtain to talk about what that actually means for you. The Zero Fluff reality is that the title on your professional's business card determines exactly how much muscle they have when the IRS sends you a letter. By the end of this hour, we are going to break down the history of the enrolled agent, the critical difference between a CPA and an EA, what unlimited representation rights actually mean when you're facing an audit, how Circular 230 governs every move I make as an EA to protect the integrity of the system. If you've ever wondered if you have the right person in your corner, this episode is going to give you the clarity you need. Let's get into the world of the EA. Most people hear the title enrolled agent and assume it's something new. Maybe a niche certification, maybe a modern alternative to a CPA, and I get why. It's not a designation you hear talked about very often. But here's the part that surprises almost everyone. The enrolled agent is actually one of the oldest professional designations in the United States government, older than the IRS as we know it today, older than modern income tax, and it didn't come from a private organization, a state board, or an industry group. It came directly from Congress. To understand what an enrolled agent really is and why it still matters today, you have to go back to a time before income tax returns, before W-2s, and before electronic filing. You have to go back to the period right after the Civil War. After the Civil War, the federal government was dealing with a massive administrative problem. During the war, property had been seized, damaged, or destroyed across large parts of the country. Farms, livestock, equipment, supplies. Many citizens believed they were owed compensation by the government for losses tied to wartime activity. As you can imagine, the number of claims was enormous, and where there's a claim system, there's also fraud. People were submitting exaggerated claims, some were outright fabricated, others were poorly documented or intentionally misleading. The Treasury Department needed a way to protect the government and give legitimate citizens a fair chance to be heard. So in 1884, Congress passed legislation that created a new type of authorized representative, the enrolled agent. These individuals were enrolled with the Treasury Department and authorized to represent citizens in matters involving federal claims. Their role was to act as an intermediary, someone who understood the rules, could present documentation properly, and could communicate with the government in an organized, credible way. That core idea hasn't changed. Over time, the nature of federal disputes shifted. Income tax was introduced, the IRS evolved, the volume and complexity of tax law exploded. But the role of the enrolled agent stayed remarkably consistent. An EA exists to do three things: understand federal tax law and procedure, communicate with the Treasury and the IRS on behalf of taxpayers, help ensure that taxpayers are treated fairly under the rules. That's it. That's the lane. Unlike many other credentials, the EA designation was never intended to be broad. It wasn't designed to cover auditing, financial statement assurance, corporate governance, or general accounting theory. It was designed to deal with federal tax matters, specifically how the tax law is applied, administered, questioned, and enforced. This brings us to one of the most important distinctions in today's tax world: who grants the authority to practice. Certified public accountants are licensed by individual states. Attorneys are licensed by state bar associations. Those licenses are valid and important, but they are state-based credentials. Enrolled agents are different. Enrolled agents are federally authorized by the United States Treasury. That authorization is recognized in all 50 states, regardless of where the EA lives or where the taxpayer resides. What does that mean in practical terms? It means that if you're in Maine, California, Texas, or Hawaii, my authority to represent you before the IRS is exactly the same. I don't need reciprocity. I don't need additional licensing. My credential isn't tied to a single state jurisdiction. That's because the IRS is a federal agency, and the EA credential was designed specifically for federal tax practice. This doesn't make EAs better than other professionals, but it does make the scope of our authority very clear. One thing I want to be very clear about in this episode: the EA designation is not about prestige. It's not about titles, and it's not about being everything to everyone. It's about representation. An enrolled agent is authorized to prepare federal tax returns, advise on federal tax matters, and represent taxpayers before the IRS in audits, appeals, and collection matters. That representation authority is built into the credential itself. It's not an add on, it's not conditional, it's the purpose of the designation. And that's why the EA exam focuses so heavily on procedure, taxpayer rights, and how the IRS actually operates. To become an enrolled agent, you have to pass the Special Enrollment Examination, often referred to as the SEE. This is a three-part federal exam administered under the authority of the Treasury Department. The exam covers individual taxation, business taxation, representation procedures, and ethics. This isn't a test on how to use tax software, it's not a data entry exam, and it's not about memorizing shortcuts. It's a deep dive into how income is defined, how deductions are evaluated, how different business entities are taxed, how audits work, how appeals work, how collection processes work, and what practitioners are allowed and not allowed to do. In other words, it's a test of tax law and IRS procedure, not accounting theory. That distinction matters. Accounting and tax are related, but they are not the same thing. Accounting focuses on financial reporting, measurement and classification, matching income and expenses, producing financial statements. Tax focuses on statutory rules, definitions created by Congress, administrative procedures, burden of proof, substantiation standards, and enforcement mechanisms. An enrolled agent is trained specifically in how the tax system functions, not just how to calculate a number. That's why many EAs, myself included, spend as much time studying the IRS manuals, procedures, and notices as we do studying the Internal Revenue Code itself. Because in the real world, what matters isn't just what the law says, it's how the IRS applies it. You might be wondering why any of this matters in 2026. We're not filing Civil War claims, we're filing income tax returns. We're dealing with notices, audits, mismatches, and documentation requests. But the underlying problem is still the same. The government has rules, taxpayers have rights, and someone needs to navigate the space in between. That's what the enrolled agent was designed to do. When you hire an EA, you're not just hiring someone to prepare forms, you're hiring someone whose role exists because disputes happen, and because those disputes require knowledge, structure, and professionalism. None of this guarantees outcomes. None of this means the IRS will go easier on you, and none of this replaces the need for accurate records and honest reporting. What it does mean is that when questions arise, you have someone who understands the process, knows how the IRS thinks, is authorized to speak and act on your behalf, and is bound by federal ethical standards. That's the value of the EA designation. Not hype, not fear, just clarity. So now that you understand what an enrolled agent is and where the designation comes from, the next logical question is this. How does an EA compare to other professionals you might be considering, especially CPAs? And more importantly, why does that distinction matter when the IRS gets involved? That's exactly what we're going to break down next. This is the question I get asked more than any other. Wait, aren't you just a CPA? And the answer is no, I am not a CPA. And that distinction isn't about titles or prestige, it's about training scope and what happens when something goes wrong. I want to start this section by saying something very clearly. Certified public accountants are excellent professionals. Many of the smartest, most ethical people I've worked with in my career are CPAs. This is not a conversation about who is better, it's a conversation about what each credential is designed to do. A certified public accountant is licensed by an individual state and trained across a wide range of financial disciplines. CPA education typically includes financial accounting and reporting, auditing and assurance, business law, management accounting, ethics, and financial statements and disclosures. That breadth is intentional. CPAs are trained to understand and work across many areas of finance and business. Some CPAs choose to specialize in tax, others focus on audits, corporate accounting, advisory services, financial reporting, or consulting. And that flexibility is a strength of the CPA credential. But it's also why two CPAs can have very different levels of tax expertise. The CPA license itself doesn't tell you whether someone focuses on tax law, IRS procedure, or representation. It tells you they have a broad, rigorous accounting background. Enrolled agents are different by design. The EA credential is intentionally narrow. It exists for one primary purpose: federal tax practice. An enrolled agent's entire scope revolves around federal tax law, IRS procedures, taxpayer rights, and representation before the IRS. That's it. We're not trained in auditing financial statements. We're not trained in attestation services. We're not trained to issue audit opinions or review reports. Instead, our training is concentrated on how income is defined under the tax code, how deductions are evaluated, how the IRS examines returns, how audits are structured, how appeals work, how collections work, and how practitioners are expected to interact with the IRS. That focus makes EAs the equivalent of a specialist within the tax system, not because we know everything, but because we know this lane extremely well. If your only goal is to file a clean, accurate return and move on with your year, either credential may be appropriate, assuming the professional actually specializes in tax. But the distinction becomes much more important when your return is complex, your records aren't perfect, you receive an IRS notice, your return is selected for examination, or the IRS disagrees with a position that was taken. That's when specialization matters. Preparing a return and defending a return are related, but they are not the same job. This is where many business owners are surprised. At the federal level, there is no license required simply to prepare a tax return. In many cases, the only requirement is obtaining a preparer tax identification number, a PTIN, online and renewing it annually. That doesn't mean preparers are unqualified. Many are experienced, knowledgeable, and ethical. But it does mean that the title tax preparer by itself doesn't tell you what training they've had, what authority they have, or what happens if the IRS has questions. Credentials determine what comes after the return is filed. Unenrolled preparers, meaning those who are not CPAs, EAs, or attorneys, have very limited representation rights. They can only represent a taxpayer if they personally sign the return in question and they are participating in the IRS's annual filing season program for the year under examination and the current year. Even then, their authority is limited to that specific return. If those conditions aren't met, an unenrolled preparer may still be able to receive information from the IRS using an information authorization, but they cannot speak to the IRS on the taxpayer's behalf or advocate for them. This is an important distinction. Access to information is not the same as representation. Enrolled agents, certified public accountants, and attorneys all have what the IRS calls unlimited representation rights. This means we can represent taxpayers in audits, communicate directly with the IRS, submit documentation, explain positions taken on a return, and participate in appeals. And we can do this regardless of who prepared the original return. That last point is critical. Representation authority isn't about protecting the preparer, it's about protecting the taxpayer. When a taxpayer handles an IRS issue on their own, that experience is often emotional and overwhelming. You're dealing with tight deadlines, technical language, high stakes, and uncertainty. A representative's role is not to fight the IRS. It's to translate requests, organize documentation, present information clearly, and keep communication focused and professional. This reduces confusion, prevents oversharing, and keeps the process moving. That's true whether the representative is an EA, CPA, or attorney. So which should you choose? There is no universal answer. If you need financial statement audits, business valuations, or complex accounting advisory, a CPA may be the best fit. If your primary concern is federal tax compliance, IRS notices, audits, appeals, or ongoing tax strategy tied to enforcement reality, an enrolled agent is often a strong choice. What matters most is the fit and specialization, not just the credentials on a website. Here's the core message I want you to take from this section. Tax credentials are not interchangeable. They exist for different reasons with different training models and different scopes of authority. The question isn't who can file my return, it's who is authorized and prepared to stand behind it if it's questioned. That's the distinction that matters. Now that we've clarified how enrolled agents and CPA differ, the next piece of the puzzle is ethics, because authority without accountability is dangerous. In the next section, we're going to talk about Circular 230, the rules that govern how EAs operate, what we're required to do when we see problems, and how those rules are designed to protect you as a taxpayer. If you've listened to more than a few episodes this season, you've probably heard me mention something called Circular 230. And I know for a lot of people, that phrase sounds dry, technical, or maybe even a little intimidating. But there's a reason I keep coming back to it. As an enrolled agent, Circular 230 isn't just a rulebook I reference occasionally. It's the framework that governs how I'm allowed to practice, how I'm required to interact with the IRS, and how I'm expected to protect you as a taxpayer. It's not optional, and it's not abstract. Circular 230 is quite literally the air I breathe as a practitioner. At its core, Circular 230 is the Treasury Department's set of regulations governing practice before the Internal Revenue Service. That phrase, practice before the IRS, is important. It doesn't just mean filing returns, it means advising, preparing, representing, communicating, and advocating within the federal tax system. Circular 230 applies to enrolled agents, certified public accountants, attorneys, and anyone else authorized to practice before the IRS. And it exists for one central reason: to protect the integrity of the tax system while safeguarding taxpayer rights. A lot of people assume Circular 230 is just a list of penalties and restrictions, a compliance checklist, a don't get in trouble manual. That's not how it functions in practice. Circular 230 is really a framework for professional integrity. It sets expectations around competence, honesty, diligence, transparency, and accountability. In other words, it defines what ethical tax practice looks like at the federal level. And that matters because tax is one of the few areas where a professional is expected to serve two interests at the same time: the taxpayer and the system itself. Let me talk about one of the most important provisions, Section 10.22, often referred to as the due diligence requirement. This section requires me to exercise due diligence in preparing returns, exercise due diligence in determining the correctness of written and oral representations, and exercise due diligence in advising clients. In plain English, this means I can't just take numbers at face value if they don't make sense. If something seems inconsistent, incomplete, or unreasonable, I have a professional obligation to ask questions. Not because I don't trust you, not because I want to be difficult, but because my role is to ensure that what's being submitted is defensible. This is one of the places where ethical practice sometimes feels uncomfortable for clients, but it's also where real protection happens. Another key provision is Section 10.21, which deals with the knowledge of error. This section requires me to inform a client if I become aware of an error in a prior return, an omission, or a failure to comply with tax law. What it doesn't require is forcing a specific action. My obligation is to inform you, explain the consequences, and discuss available options. What you do next is your decision. This is important because ethical tax practice isn't just about control, it's about informed choice. From a taxpayer's perspective, Circular 230 can sometimes feel like friction. Why can't we just round that? Why do you need documentation? Why are you flagging something the last preparer didn't mention? The answer is simple: because shortcuts today often turn into problems tomorrow. Circular 230 forces practitioners to slow down, verify, and document. And while that may feel tedious in the moment, it's often the difference between a smooth resolution and a prolonged dispute. One of the most misunderstood aspects of Circular 230 is how it defines the relationship between the taxpayer and the practitioner. I don't work for the IRS, but I don't work against it either. My role is to advocate for you within the rules, ensure your rights are respected, present your position clearly and honestly, and prevent unnecessary escalation. This is what's often referred to as a dual duty. I owe you competence, confidentiality, and advocacy. I owe the system honesty, accuracy, and professional conduct. Those duties are not in conflict, they're complementary. From the IRS's perspective, Circular 230 exists because practitioners act as gatekeepers. When a representative is involved, the IRS expects organized documentation, focused communication, accurate citations, and professional conduct. That doesn't mean agreement, it doesn't mean leniency, and it certainly doesn't mean special treatment. What it means is structured interaction, and structured interaction benefits everyone. It's just as important to say what Circular 230 does not do. It does not guarantee outcomes, shield taxpayers from enforcement, allow practitioners to hide information, or permit aggressive positions without support. Ethical representation is not about winning, it's about process, fairness, and defensibility. When an IRS issue arises, whether it's a notice, an audit, or an appeal, the quality of representation often determines how smooth the process is. Not the outcome, the process. Circular 230 trained practitioners understand what the IRS is actually asking for, how to respond without over-explaining, how to frame documentation, and when to push back and when not to. This reduces confusion, stress, and unnecessary back and forth. Circular 230 exists because the tax system depends on trust. Trust that returns are honestly prepared, advice is given competently, and representation is conducted professionally. When that trust erodes, everyone loses: taxpayers, practitioners, and the system itself. As an enrolled agent, my role is to operate inside that framework every single day. Not to scare you, not to lecture you, but to make sure that your position is one you can stand behind. So now that we've talked about the authority and ethics, the next question becomes practical. What does representation actually look like when the IRS sends a letter? In the next section, we're going to walk through real-world scenarios, what happens with notices, audits, and why having the right professional involved changes the experience entirely. Up to this point, we've talked about credentials, authority, and ethics, but all of that can still feel a little abstract until you're actually sitting there with a letter from the IRS in your hands. So let's talk about what representation looks like in the real world. When people hear the phrase unlimited representational rights, they often imagine a courtroom drama or aggressive arguments. That's not what this is. Representation is about process control. It's about who communicates, how information is presented, and how the situation is managed from start to finish. Let's walk through two very common scenarios: the IRS notice and the audit. Scenario 1. the IRS notice. Here's a situation many business owners recognize. You open your mail or your IRS online account, and there it is, a letter saying you owe $20,000. The explanation references an income mismatch, the deadline is short, the language is formal and intimidating. Your heart rate spikes. At that moment, most people are not thinking clearly. They're thinking, did I do something wrong? Is this going to spiral? What happens if I can't pay this? Who do I even call? That emotional response is completely normal, but it's also where mistakes happen. When you don't have representation, the burden falls entirely on you. You're responsible for calling the IRS, waiting on hold, sometimes for hours, understanding what the notice actually says, explaining your situation clearly, and knowing what documentation matters and what doesn't. Most taxpayers try to be helpful, they overshare. They explain context the IRS didn't ask for, they volunteer information that isn't relevant and sometimes isn't beneficial. Not because they're dishonest, but because they're stressed. Now let's look at the same scenario with representation in place. You sign a Form 2848, which authorizes me to act on your behalf for that specific matter. That form doesn't give me special treatment and it doesn't guarantee an outcome. What it does give me is standing. Once representation is established, I communicate directly with the IRS. I clarify what the notice is actually asserting. I determine what documentation is relevant. I organize the response, and I submit the information in a structured, focused way. In many cases, the taxpayer's direct involvement becomes minimal depending on the issue and the IRS's requirements. You're still informed, you're still involved in decisions, but you're no longer the one navigating the system alone. That shift from reactive to structured is what representation really provides. From the IRS's perspective, notices are often generated automatically. They're based on mismatches between reported income sources like W-2s, 1099s, and payment processor data, and what was reported on the return. The key question isn't, why is the IRS doing this? It's, what information is missing or misunderstood? A representative's job is to identify that gap and address it without escalation, speculation, or unnecessary complexity. Scenario 2, the audit. Audits sound scarier than they usually are, but they're also where representation matters the most. An audit is not about proving innocence or guilt, it's about substantiation. The IRS is looking for documentation, consistency, patterns, and compliance with legal standards. They're not looking for personal stories, stress explanations, or intentions. They're looking for records. As an enrolled agent, my role in an audit is not to argue emotionally or aggressively. It's to understand the scope of the examination, identify what the IRS is actually testing, determining what documentation meets the legal standard, and present that documentation clearly and concisely. That last part is crucial. More documentation is not always better documentation. Oversharing can create new questions. Poorly organized records can extend the audit. Emotional explanations can muddy otherwise clean issues. Representation acts as a buffer. One of the biggest risks for small business owners in audits is emotional oversharing. This looks like explaining why something felt deductible, talking through business struggles that aren't relevant, and volunteering information outside the scope of the audit. Again, this isn't dishonesty, it's anxiety. A representative keeps communication focused, relevant, and grounded in documentation and tax law. That protects you from unintentionally expanding the scope of the examination. This is important to say clearly. Representation is not about fighting the IRS. It's not about being confrontational, and it's not about beating an audit. It's about clarity, structure, and professional communication. Most IRS issues resolve more smoothly when both sides understand what's being asked, what's being provided, and what the next step is. That's the environment representation is designed to create. It's just as important to understand the limits. Representation does not eliminate taxes owed, override the law, replace the need for records, or guarantee outcomes. What it does is ensure that your position is presented accurately, supported appropriately, and evaluated fairly. Small business owners wear a lot of hats. IRS procedure shouldn't be one of them. Representation allows you to stay focused on running your business, reduce stress during IRS interactions, avoid procedural missteps, and navigate issues methodically instead of reactively. It's not about avoiding responsibility, it's about managing it properly. Here's the honest truth. Most IRS issues are not catastrophic, but they can become more complicated than necessary without structure. Representation doesn't make problems disappear, but it does prevent them from snowballing. And in tax, preventing escalation is often the biggest win. Now that you've seen what representation actually looks like, both with notices and audits, the final question is this: how do you decide who should be in that role for your business? In the next section, we're going to talk about why expertise often costs less in the long run and how to evaluate a tax professional beyond their fee. When people start looking for tax help, one of the first questions they ask, often the very first question, is about price. How much do you charge? Can you do it cheaper? Why does this cost more than what I paid last year? And I understand that instinct. Small business owners are cost conscious by necessity. Every dollar matters. But here's the reality I've seen over and over again, both inside and outside the IRS. In tax, the lowest upfront fee is rarely the lowest total cost. Most people think of tax preparation as a transaction. You pay a fee, a return gets filed, and you move on. But tax doesn't end when the return is submitted. Filing is just the starting point of the IRS's review window. What matters just as much as how the return is prepared is how defensible the positions are, how well the documentation supports those positions, and who is prepared to respond if the IRS asks questions. When price is the only deciding factor, those considerations often get pushed aside. Let's talk about what people usually mean when they say cheap. They don't usually mean unethical. They don't mean fraudulent. They mean fast, minimal, and inexpensive. But speed and minimal review come with trade-offs. A preparer who doesn't deeply understand Schedule C deductions, the ordinary and necessary standards, substantiation requirements, or industry-specific risk areas may still produce a return that looks fine until it doesn't. Here's where the math changes. A preparer who saves you $100 or $200 on their fee by not asking questions, not reviewing patterns, not flagging weak deductions, and not explaining documentation standards may unintentionally expose you to adjustments, penalties, interest, time cost, and stress. And those costs rarely show up neatly or immediately. They show up months or years later when the IRS sends a notice. At that point, the preparation fee is irrelevant. What matters is how defensible the return actually was. One of the most important concepts I want small business owners to understand is defensibility. A deduction doesn't need to be aggressive to be problematic. It just needs to be poorly supported. Defensibility means the position is supported by tax law, the documentation exists, the explanation makes sense, and the numbers are consistent. Expertise isn't about squeezing every possible dollar out of the return. It's about building a return that can withstand scrutiny. Why expertise often costs less over time. This is the part that feels counterintuitive. Professionals with deeper expertise often charge more upfront but cost less over the life of the return. Why? Because they ask better questions, spot issues earlier, structure deductions properly, educate clients before problems arise, and reduce the likelihood of prolonged IRS interaction. That doesn't eliminate risk, but it manages it intelligently. When you work with an enrolled agent, you're not just paying for data entry, you're paying for judgment. Specifically, you're paying for systemic knowledge. EAs understand how returns are screened, not in a secret or manipulative way, but in a practical one. We know common mismatch triggers, documentation patterns the IRS expects, where small businesses are typically examined, and how automated notices are generated. That knowledge shapes how returns are prepared from the beginning. Audit and notice readiness. Most tax returns are never audited, but many receive notices. The difference between a quick resolution and a prolonged issue is often how well the return was prepared and documented in the first place. EAs are trained to think, how would this look if questioned? Is this supportable? Is this clearly explained? That mindset reduces friction later. Proactive strategy, not aggressive planning. Proactive strategy doesn't mean aggressive loopholes or risky positions. It means timing income appropriately, understanding expense categorization, planning estimated payments, and avoiding preventable surprises. It's about peace of mind, not pushing boundaries. Why authorization matters more than marketing. A polished website, a friendly personality, or a low price doesn't tell you what happens when the IRS gets involved. Authorization does. The key question isn't, can this person file my return? It's, is this person authorized and prepared to deal with the IRS if something goes wrong? That's a very different standard. One cost that rarely gets talked about is your time. Handling IRS issues yourself or with limited support means long hold times, confusing letters, repeated explanations, missed deadlines, and emotional stress. Representation and expertise don't just protect your tax position, they protect your capacity as a business owner. The most successful business owners don't treat tax professionals as vendors, they treat them as partners. A partner explains decisions, flags issues early, sets expectations, doesn't promise outcomes, and helps you understand risk. That relationship costs more than bare minimum preparation, but it also prevents costly mistakes. Here's the honest takeaway. Just because someone can prepare a tax return doesn't mean they're authorized or trained to deal with the IRS when questions come up. Expertise isn't about paying more for the sake of it. It's about paying for clarity, defensibility, and process. And in tax, those things almost always cost less in the long run. So as you think about who you trust with your business's tax matters, don't just ask, how much does this cost? Ask, what happens if the IRS has questions? Who will handle that? What does this person's training prepare them for? Those answers matter far more than the number on the invoice. Being an enrolled agent is more than just a title to me. It's not something I earned and then put on a website and forgot about. It's a commitment I show up to every day in how I prepare returns, how I ask questions, how I explain risk, and how I interact with the IRS on behalf of clients. Because at the end of the day, this isn't about credentials for their own sake. It's about making sure that you, the small business owner, are not navigating a federal system alone or blindly. Earlier in the episode, I used the phrase, a seat at the table with the federal government. I want to unpack that a bit, because it's not about influence or leverage. Having a seat at the table means understanding what the IRS is asking, knowing which rules apply and which ones don't, communicating clearly and professionally, and responding with documentation instead of panic. Most IRS interactions aren't adversarial, they're procedural, and procedures are much easier to navigate when someone understands how they work. That's the role of representation. This conversation wasn't about ranking professionals or telling you that one credential is better than the other. It was about structure. Who is authorized to do what? Who is trained for which situations? And why those distinctions matter after a return is filed, not just while it's being prepared. Understanding that structure puts you back in control. A lot of people think representation only matters after something goes wrong, but in reality, representation awareness changes how returns are prepared in the first place. When your tax professional understands how returns are reviewed, how documentation is evaluated, and how issues are resolved, they prepare returns differently. Not aggressively, not fearfully, but intentionally. That intention shows up in defensibility, and defensibility is what creates peace of mind. You don't need to fear the IRS to respect the process. One thing I want to continue reinforcing throughout the season is that fear is not a tax strategy. The IRS is not out to get small business owners, but it is tasked with enforcing the law, and that means asking questions when things don't line up. When you understand that, the system becomes less intimidating. It becomes a process instead of a threat. At Zero Fluff Books, education always comes before action, before filing, before amending, before responding to a notice, because informed clients can make better decisions, and better decisions lead to fewer surprises. This podcast exists to give you context, not commands. If today's episode helped you understand the alphabet soup of tax credentials a little better, CPA, EA, PTIN, AFSP, I encourage you to share it with someone who's currently looking for tax help. Not because there's only one right answer, but because asking better questions leads to better outcomes. And most business owners were never taught what questions to ask. As we continue through this season, we're going to keep building on this foundation. We'll talk more about how the IRS evaluates information, what makes records defensible, how to reduce stress during tax season, and how to shift from reactive tax decisions to intentional ones. Each episode is designed to give you one more piece of clarity without overwhelm. You don't need to master tax law to run a successful business. You just need reasonable records, honest reporting, and professionals who explain the rules instead of exploiting confusion. That's what this show is about. Thanks for listening to Zero Fluff Books. I'm Lauren Twitchell, and I'll talk to you next time.